Hey guys, this is Omer from MMOs.com. I'm going to do a financial look video at Square Enix. We'll take a deep dive into the company's revenues, their profits, their size, and a bunch of other good stuff. Anyway, we'll go ahead and get started. I do want to say this will be a little bit different than my previous financial look videos because I'll be talking over a PowerPoint presentation. And the reason behind that is I can actually get more into the nitty gritty this way. But anyway, let me know what you guys think about this video. And if you guys like it, I'll definitely do more. Anyway, let's jump right in. Most of you guys already know what Square Enix is. They're a giant video game company in Japan, and they make a lot of RPGs as well as some MMOs and mobile games. Anyway, let's go and get started here. You can see their key stats. This is on July 4th. These numbers do change day to day. Their revenues will obviously change in the future, but their market cap is 433 billion Japanese yen, and that's about $3.8 billion in US money. And the market cap, the best way to look at market cap is just the value of the company. Square Enix today is valued at 3.8 billion. It's a very easy number to calculate. All you got to do is look at the value of the company's stock, the price of the stock, and you multiply it by all the stock outstanding. And that's if you were to buy all the company's stock today at the current market price, it would be about $3.8 billion. Easy to compare. That's what all of Square Enix is worth today. Sales, very easily, it's about 2.28 billion. And that's over the last 12 months. Numbers are in Japanese yen, obviously, but I converted all that for you. Their net income, which is basically their profit in the last 12 months, is about 177 million US dollars. Their price to earnings is about 21.5. Essentially, you divide the market cap by how much money they make, and you'll get about 21.56. And right at the next page, you can break down their revenues. Digital entertainment revenues, their HD games, is actually their biggest segment. Square Enix makes $822 million in fiscal year 2017 off of their HD games, which includes Final Fantasy 15, as well as all their traditional big budget, full price games on the PC and console. This is basically everything minus mobile games, minus MMOs. All the Final Fantasies and all those big releases. And you can see it's actually been growing. And mainly the big jump between fiscal year 2016 and 2017 is thanks to Final Fantasy 15, as it very clearly highlights. All this data is directly from Square Enix's own investor presentation. On the next page, you can see some of their big titles: Dragon Quest 11, Final Fantasy 15. In the future, they expect to release Final Fantasy 7 Remake, their new Kingdom Hearts game, and you can see where they expect the digital entertainment HD games revenue to come from in the future. Keep in mind, physical year is not the same as calendar year, so the dates may be a little confusing, but physical years are slightly different from calendar years. But it gives you still a basis to compare year over year to. Revenue breakdown continued. Their MMO revenue is broken down in this chart, and this is actually very fascinating for me because I run MMOs.com. I'm obviously very interested in MMOs. Basically, every Square Enix MMO combined made about $201 million in fiscal year 2017. That's Dragon Quest X, Final Fantasy 14, as well as Final Fantasy 11. The reason for the decline between fiscal year 2016 and fiscal year 2017 is because they released 2 expansion packs in the last period: Dragon Quest X expansion and Final Fantasy 14 expansion, which was Heaven's Word. Stormblood is also releasing, so you can expect fiscal year 2018 numbers to go up. More revenue. For context, Square Enix MMO revenue is about $201 million in the last 12 months. And again, that's Final Fantasy 11, 14, and Dragon Quest X. These are all subscription games. You can also calculate about the monthly active users the company has. You take 21 million, you divide it by 180, which is about $15 a month, times 12 gives you 180. And if you divide those numbers, you get about 1.1 million active subscribers paying about $15 a month. Though the number is overstated because it does count microtransactions like the MOG station of FF14 and whatnot. But you still get about 1 million people paying $15 a month. It gives it some nice context on those numbers. MMO revenue is actually particularly valuable. Anytime a company can make recurring revenue, it's valued more than a one-time sale. Because even though they make a lot of money off like Final Fantasy 15 and all these disc sales, the problem with that is you got to keep making these games, and that's a one-time sale. You can't keep making money off it the way you can with MMOs. So MMO revenue is steady and predictable, and that's what investors like. Revenue breakdown continued. This is their digital entertainment segment for games for smart devices and PC browsers, essentially their mobile games. If you look at the revenue growth, is actually quite tremendous. The last fiscal year 2017, they made $737 million in gross revenue from mobile games, and this is their biggest engine of growth. It's not their biggest segment just yet because you had PC, you had console games and PC full budget games making a bit more at over 800 million, but this is actually growing the fastest, and I think the biggest area for continued growth in the future. You can see some of their big mobile games right now. Dissidia, Final Fantasy Brave Exvius are all doing fairly well here in I've actually never played this Dissidia game, but Brave Exvius I know is doing fairly well here in the West as well as in Japan. Mobile potential is actually huge for this company. Give you guys some more context. Honor of Kings, called Strike of Kings in English, from Tencent made about $400 million in revenue in April 2017 alone. That was the game's launch month. That's twice as much money as every Square Enix MMO made last year combined. So one mobile game in 1 month made twice as much money as Square Enix made with 3 of their mobile games combined times 2 all year, which is insane. Game of War from Machine Zone did about $900 million in 2016 alone, and that's 3 times what Square Enix, every Square Enix MMO made last year off one mobile game. And this is the reason we have games like Final Fantasy 15: A New Empire. I did a first look video for it. I personally think this game is pretty garbage. I think it's a pay-to-win, nonsensical game. As a big fan of the Final Fantasy franchise, it does sadden me to see this, but it should be no surprise that we get games like this, because when Game of War makes this much money, I mean, Final Fantasy, Square Enix is going to license their IP to Machine Zone, the guys that made Game of War, to make a reskin version of Game of War with the Final Fantasy characters, so Square Enix can cash in on that sweet, sweet mobile money. I think we'll get more games like this in the future too, because these games are insanely profitable. The mobile game market is expected to increase in the future. You can see 2016 to 2019 estimates by Super Data Research. And obviously the biggest contributor to that is Asia. Asia is a booming market for mobile games, and Square Enix rather is based in Japan, so they have easy access to that market. Revenue breakdown continued. They actually make some money off amusement machines as well, arcade machines. They make $377 million off that in the last fiscal year. And the number's been pretty negative to flat, so don't expect any big growth here in the future. I don't think anyone expects Square Enix to make a booming comeback in amusement machines. They're making good money there, but it's not going to be a giant revenue growth engine for them. But it gets a good chunk of change. I bet most of you guys didn't know they made that much money off amusement machines. Quick recap: their game sales are about $822 million. This is unpredictable and very much hit-driven. You have stuff like Final Fantasy 15, which is they made a ton of money off that. It's unpredictable because you may spend all this money on a game and it may suck, or it may not generate the revenue you expect from it. So it's hit-driven and unpredictable. Whereas MMOs are much more predictable, but the revenue there is only we only expect minor growth in that segment going forward. And you saw from the chart there was not really explosive growth there either. Mobile revenue, on the other hand, is booming year over year. Made $737 million in the last fiscal year. And it's also hit-driven, but there's less risk because a mobile game, it doesn't take as much money to make. A game like Final Fantasy 15 will cost a fortune to make. The big budget AAA games can cost anywhere from $40 to $100 million with their marketing budgets included. That's a lot of money. A mobile game, on the other hand, they're also hit or miss, but they don't cost as much money to make, so they're less risk. Amusement will be minimal to negative growth going forward, as we said earlier. They make some money off publications and merchandising, manga publishing, T-shirts and cup sales and all that jazz, but it's not a lot of money for the company anyway. This is their revenue forecast for next year, fiscal year 2018. It's actually expected to be flat going forward. So basically the same as fiscal year 2017. And even though it's flat, people typically say, oh, their revenue's not increasing, they suck, they're doing very poorly. But this is actually very impressive, because it's a little deceiving, because even though they expect flat revenue year over year, it's because they had such a major release in fiscal year 2017. Final Fantasy 15 came out in that fiscal year. And apologies, again, fiscal year is not the same as calendar year, but it's just view it as a 1 year period. It may not be exactly matching with the calendar, but it's still that 1 year period. So even though they're not gonna have a major release like FF15 again in this fiscal year 2018, they still expect to get flat revenue, which is they must be making that up somewhere else. They probably expect to make that up in mobile game sales going forward. And if you look at from fiscal year 2017 to 2018 for units sold for their digital entertainment, their disc games, their full budget games, they sold 34.76 million units of their games in fiscal year 2017, and they only expect to sell about half of that at 15.6 million in fiscal year 2018. So again, revenue will decrease a lot in this segment, but they expect to make up for it elsewhere, namely mobile revenue. These are strategies going forward, straight from their investor presentation. They want to focus more on digital sales. They want to basically cut out the middlemen. GameStop, Walmart, places you buy games. Anytime you buy a game at those places, some of that margin is lost. If you buy a game for $60, Walmart's got to make money, or GameStop's got to make money, so there's a built-in margin for the retailer. If they can sell you the game directly from Square Enix.com or their own distribution platform, they can cut that middleman out and make some more money. They want to focus on making games as a service, which is a fun industry buzzword, but it basically means they don't want to sell you a game for $60. They want to be able to maybe get you to play a game for free, or even if you buy a game, they want you to keep paying monthly for microtransactions. They want to be able to get money from you every single month. That's what games as a service means. It's a fancy word for saying they want to milk you as much as they can over longer stretches of time rather than just upfront one time. These are my predictions. I think Square Enix will eventually have a mobile hit. They have a whole bunch of mobile games already, but none of them are huge mobile hits. They have franchises like Final Fantasy, Dragon Quest X, Kingdom Hearts, Tomb Raider, Star Ocean, Deus Ex, Just Cause, Mana, which is Secret Mana, that franchise. They actually have a mobile game for Mana. It's a buy-to-play game. It's not doing amazing, but it's a buy-to-play game. Mobile games that are buy-to-play typically don't make a lot of money anyway. The Bravely franchise, Thief franchise, and so on. Mobile hits can make a lot of money. Monster Strike made 1.3 billion last year. Clash of Clans 1.2, Clash Royale 1.1, Game of War 910 million, Mobile Strike 900 million. And while they don't have any big mobile games just yet, they have a lot of games. None of them are just ginormous hits just yet. You can see actually these are the highest grossing games in Japan on iOS. We can put it in English, translate to English. App Annie is a nice website you can track apps in. So if we search Square Enix, you can see what games they have. They have a bunch of games on the highest grossing list on the right. Dragon Quest Monsters is number 32. Star of Dragon Quest is number 34. And you can see they have another Dragon Quest game on here as number 51. And they have Final Fantasy Brave Exvius as number 56. These are only in Japan. Great website for finding app revenues. You can see in the United States, they have a couple games on there as well when this loads. Square Enix again. Actually, they have nothing in the top 100 right now, it looks like. I can't see anything in the top 100 here. Just Hitman Sniper as one of the top paid games, but nothing on the highest grossing games. And wait, back over here. My other predictions going forward, I think console games, amusement, and MMO revenues will remain steady with minor growth. Mobile will drive their revenues a lot higher. I think mobile is still a huge untapped market for Square Enix. Even though it's been growing rapidly, a single game can make more money than everything they have on their mobile category. They have a lot of small hits. If they can land one big mega hit, I think they'll do really well. Even without that, I think revenue will increase going forward. Company stock price, in my opinion, will continue increasing. Some disclosure for you guys. I am an investor in Square Enix. I have been for a little bit, so I've made some money investing in them. Stock price has risen since I bought them. I'm optimistic on the future. I'll talk more about that towards the end of this presentation here. I'll look at their balance sheet, some nitty-gritty financial stuff. They have about 1.8 billion in current assets. Current assets is basically cash plus anything that can easily be turned into cash. Stuff like certificates of deposit, short-term bonds, whatever they have that can be easily turned into cash. They actually have 1.37 billion bucks sitting on cash as well. Non-current assets are about 309 million, and that's basically office buildings, computers, game engines, basically everything that's not easily convertible to cash, but they're assets on their books. Liabilities are basically debt, how much money they owe. So net cash is basically if you paid off all the company's debt with their cash, you'd still have $822 million left over. That's actually pretty remarkable considering the entire company is only worth $3.8 billion, but they have $822 million in cash just sitting there as well. So they're in a very good financial position. They can pay off all their debts and have a crap ton of cash left over. Their book value, which is basically if you were to liquidate the company for some reason, this is never going to happen. But if you were to liquidate the company, you'd get about $1.6 billion left over. That's basically all the assets minus all the liabilities, what you'd have left over. Enterprise value is a little more relevant, a little more complicated too. It's essentially the value of the enterprise. You calculate that by looking at the company's market cap, but you adjust it for the company's net cash position after paying off debt. So you start with the market cap of 3.8 billion, and if you paid off all the debt with all the cash, you basically subtract your net cash from your market cap, and you get 3 billion. It lets you say, okay, Square Enix is actually worth about 3 billion, even though it's valued at 3.8 billion. 800 million of that is literally just cash anyway. So cash is worth cash. So it's no point of including, the Square Enix's value by having some cash in there as well. Apologies, that sounded a bit convoluted, but yeah. Some conclusions. The company's worth about $3.8 billion today. They made $177 million in profit last year. I expect that number to go up in the future. Video gaming is a booming business, as you saw in the mobile game revenue chart, expected to increase. They have a lot of cash. They're transforming from a product to a service company with recurring revenues. They're rapidly growing mobile sales. I think will continue in the future. They pay about a 1.14% dividend yield today as of this video. So essentially these companies, when you own shares in a company, let's say you invest $100 in Square Enix, you bought their shares, they pay out about $1.14 every year in dividends to their investors. So some of the profit they make, they give back to their investors as cash, and the rest of it they keep. It's only 1.14%. They could pay out a lot more if they wanted to, but they keep a lot of their cash for themselves to invest in more games, to do other stuff with as well. You get about 6% earnings yield to EV if you invest in Square Enix. A little convoluted metric, but essentially it's like you're making about a 6% interest rate if you invest in the company today, because the company makes $177 million in profit, and you basically divide this number by the $3 billion enterprise value we saw earlier, and you get about a 6% yield. That's how much money the company is making. And even though you're only getting 1%, 1.1% of that profit, you're still entitled to that, because if you own stock in Square Enix, you own a piece of the company. And any amount of money they keep increase the value of your shares. Stock performance over the last 5 years has been quite good for the company. This is in yen. This chart is straight from Bloomberg. If you invested or you bought shares in the company back in 2013, you could have bought shares about 1,245 yen, and since then it's increased about 3,500 yen. So they've went up about threefold since 2013. I'm personally optimistic on video games in general. I like Nintendo a lot. I think it's a great investment. I like Square Enix. Activision Blizzard has been doing really well as well. So I've done a lot of research and looked into a lot of these companies. I'm an investor in Nintendo. I'm an investor in Square Enix and a few other video game companies as well. And I'm personally optimistic about them. And I think Square Enix is going to keep doing well, mainly because of mobile. You know, I play Final Fantasy 14, but I realized that their PC MMO business is going to be steady. It might grow a bit with Stormblood, but nothing significant. All their growth, I think, will come from mobile gaming. Mobile gaming, I still believe, is a massively untapped market for Square Enix. They don't have a single massive hit just yet. And if they can land just one hit, they could potentially double their mobile game revenue, or even triple their mobile game revenue with one big hit. And with how many franchises they have, and with how ubiquitous Final Fantasy is, I think that is certainly a possibility. Anyway, if you guys have questions or you're curious about, maybe give me some feedback on this one, let me know in the comments below. I got into some detail, but I didn't want to get too nitty gritty because I want to keep these videos fairly short. I actually write about and research a lot of these video game companies, and I've published stuff on seekingalpha.com. I'll put a link to that maybe, where I've looked through a company's balance sheet. I've broken down the real estate, the value of the real estate, the value of these other assets, and I can get really nitty gritty with it, but it takes a lot longer. But if you want to see that, I'll probably link to it in the video description. But anyway, guys, let me know what you guys thought about this video. And if you're interested in more financial looks in this format, just let me know in the comments below. Hopefully you guys learned something. I think personally, I gave you my opinion on the company. I don't think you should run out and buy the stock. I don't think, you should do this if you don't understand what's going on. But hopefully it did educate you on the company. People often say stuff like, oh, Nintendo's doomed. Oh, Square Enix is doomed, without understanding the financial metrics behind these companies. Like Square Enix, for example, could literally just do nothing for years and they'll be fine because they have $800+ million in net cash, after paying off their debts. So even if Square Enix has a really bad year, it's not going to kill them. They're sitting on so much cash and so little debt that it doesn't matter if they release a few flops. So Square Enix is in strong financial condition, and I think they'll keep growing. And Nintendo's actually in an even better position. I might do a video on Nintendo next, because I think Nintendo can make a lot of money off mobile games in the future. But yeah, that's my financial look at Square Enix. There you go. Let me know what you guys thought. Later, guys.